Now we have by far my favorite model. It's the 4 hour PO3. Either reversal or continuation, they are so clean, and the RR is perfect because this leads into our 90-minute trade, and it's such a good trade. 4 hours, so much time for you to get a great stop loss, a great RR movement. Like movement like this, like one to fours, are just simple because if we're trading reversal, we're trading usually in the range of 30 minutes. So how I want you to think about our 4 hour before we start is that a 30-minute has an objective. We talked about this. 30-minute objective is to hit a target before doing a 4 hour reversal. And so if we're talking about reversals first, just get continuations out of your head. If we're talking about reversals, then we're using that range to create a sweep of liquidity for our 4 hour candle wick, and then the body is going to distribute. And that's what we look for with our cycle alignment. So if we have a manipulation right here, I'm just going to make this more clear because this is a great internal example of a quick 30-minute 4 hour PO3. So right here, if we're going to reverse, this is the range that I want to use. I'm looking for a cracking correlation at the 30-minute high, or one that is still put in place, or a new one. Because the cracking correlation, ideally, there is an example that, well, actually, we'll talk about that later. But cracking correlations either can be at the top or in between the 10 a.m. range that is not the high. So, like if we had a cracking correlation between this high, the stop loss, and say this wick right here, then that would also be valid. There doesn't need to be a higher time frame one. The microcycle will do, but just know that you might not get the full move. So I was expecting manipulation and then it to dump. Distribution right here all the way to 12. I was expecting it to move lower. It ended up accumulating. And so I started to question whether my cycles were aligned, but they were. We had accumulation, we had a manipulation in the 30-minute PO3 to distribute in our microcycle in distribution at that exact time. I mean, if we line things up, that's basically where our inversion for value gap got created, gave us a safe stop, and we had that 15-minute swing divergence, 15-minute PSP to give us that other crank correlation confirmation to send us lower. We had low resistance TP, which was the open low that we created, and then relative lows, which these created with our electronic trading hours low. And we it didn't end up hitting our unfilled new daily opening gap, which surprised me a lot. So that just goes to show that close targets are sometimes all you want to target for the 4 hour reversal. But it's like basically all determining on how price action makes that 4 hour PO3. So this pattern, this 4 hour PO3 pattern, you would just want to take this to the low because after that, you're just kind of just hoping off of that. So that's like an internal move. Let's look at what the confluences would be on something like that. So this one, I obviously didn't chart too much. There wasn't a lot of confluences. It was just a cell model inside of a cell model. So this, we can see we are in our manipulation distribution cycle and then our expansion cycle before distribution. And so the draw liquidity is lower. What I want to mention here is what I talked about before, our 30-minute objective. Because our 30-minute objective made this 4 hour trade so easy. So first, 30-minute objective has to be hit. We talked about those. That's true New York, true day open, what we see right here, true New York high, really like to the tick. There's the top of that candle, there's the bottom of that candle. So I read it twice. London high, all-time high, previous day high is right there. We didn't even hit all-time high. And right there, that shows me how bearish we are because this was a long that I took on a combine, and then this was a short that I took on, I'm pretty sure it was a paper short because I was like trying to half pass my combine for this day. So microcycle distribution, 90-minute distribution, daily manipulation. So if we're in daily manipulation, and I want you to use these cycles like they're what's going to happen, like use them as they're going to predict the future, like as if they're the genie in the bottle, because what else are we using this for? We're using it to make predictions because of collected data. So have that kind of confidence when you are entering that when it comes X expansion, come 10:30, that 10:30 candle SMT, after that I am confident that it is going to drop. And look at those candle bodies. drop, put a standard div on of that range right here we see on our 10 a.m. that we used to trade inside. Like I said, this kind of reversal, what am I looking for? The confluences are like right in front of you. If we line them up side by side, it's literally the same thing. I don't know if this is big enough right here. So we're looking at the same thing. We're looking at a high being swept, some sort of liquidity being taken. Right here, we can use the swing divergence. Here, we can use True New York, True Day Open. Here, True Day Open was also hit. It's not showing up here. So I want you to pay attention to True Day Open. Let's say this is True New York as well. So New Day opening gap, 30-minute PO3 hits our objective. We then have a range being made in the midst of that retrace. We create a Kraken correlation above this range. A plus scenario would be two Kraken correlations. I would want to see one right here. I would like to see one at this top and then one at this internal top. With those two Kraken correlations, I am then looking for, obviously, that. So right here I mentioned 1 to 5 minute gap BPR. This would be great for that inversion, what I want to see in that area. Same thing that we had right here. Here's our 5-minute gap. And then our CSD was right inside that 5-minute IFEG. You can also use the wick quadrants. That's something I use to grade the like how strong our 10 a.m. candle is. Like if the wick is being created or the 30-minute wick is pretty big, then I'll use that wick to grade how strong the 10 a.m. is trading into that wick. If it's a high like this, I'm expecting a reversal because we hit our target. Something like that is what I would use the wick quadrants for if we're predicting a reversal pretty soon. But other than that, Confluences, we have our gap alignment. We got to know where our reversal is going to be. We got to know our premium and discount because that's where the highs and lows are. 1 minute to 5-minute IFEG, BPR, that's just obvious entry criteria. We need that retrace. We need that Kraken correlation. The SMTs that I mentioned, the Kraken correlations, we need that. We need one of them, microcycle minimum, microcycle at 90-minute. Let me phrase that. We can use a microcycle if True New York, True Day Open is mitigated and our time cycles tell us that we're going to make a reversal. And by that time, 90-minute and microcycle should be aligned on the microcycle. If there is no Kraken correlation on the 90-minute, then it's all right if you can just enter on a microcycle, but it's better to have, especially if you're entering on 2 microcycles and there's no 90-minute, that's all right. But I do prefer a 90-minute and a micro. If you're entering on just a micro, I'd be wary of it just because you do have a protected stop, but still, if you're not confident in the objective, then I wouldn't enter on just that alone. Plus, we have all these confluences that we're adding on top, so you decide your Kraken correlations. 90-minute and a micro is perfect. 2 micros is perfect as well. And if you want to just wait for those, they happen all the time. 1 micro is great if you have, 5 other confluences, like what we're talking about. CISD, that's kind of a given. CISD, you don't have to wait for it to happen. ICT said that an IFEG is a CISD. And if you're looking at our opening for 10 a.m., then usually the first inversion for value gap is our CISD for that wick. So that's what happened here. Usually we get a BPR in the 2 or 3 minute is what I'm consistently seeing, so watch out for those. OTE retrace. It just comes to the OTE of this range. I mean, if we're looking at the OTE of another 10 a.m. range, if this one shows, I didn't draw out the OTE, but I mean, we can look at OTE of the range. CE is up here. We obviously know that OTE is our 70 to 80% retrace that we want to sell in. Right there, that's like 65%. If you want to sell higher, then you'd have to get it immediately off that Kraken correlation. But like I said here, we have an SMT at the high, inversion for value gap. We're trading not very high time frame correlated because we just hit this open low, but it was correlated enough to give us that dump. So time was aligned in some sense. I just don't have the cycles written here. So that is our 10 a.m. short. That's our reversal. You can see that the reversal will either move all day or it really will just be a short move because the 4 hour, if like we just go to the 4 hour chart, you notice how wicky it is. It's so wicky. I mean, it's designed to move in both directions. And if we're looking at the 4 hour on our AM session, like look, It's designed to move in both directions. They're very large wick candles. And I know we're not showing very much if we just go to the electronic trading hours. Like these are very, except for Asia, of course Asia, but the wicks on these candles, bro, they're so big. So the idea for 4 a.m. is to, or sorry, 10 a.m. for our PO3 is to hit both sides. We're trying to create a high for the wick, and then we're trying to do some sort of selling down. And that can happen quickly. That can happen over like the 2 hours that I plan to trade, 9:30 to 3 hours, 9:30 to 12:30. It's really, it's really dependent. So what what this really comes down to is our cycle alignment. Our cycle alignment is how we take our entries and exits. And usually, if you're not highly cycle aligned, if you don't have like three or more, then you want to exit more based on time and not as much price. Because lows like these, if you try to hold for longer than it was giving, like a four, sorry, we're looking at reversals. If we're trying to hold it longer than it's giving, like these two examples, then you're just going to take less profit. So knowing where your target is for the 4 hour PO3 based on time frame alignment, based on cycle alignment, is ideal for maximizing profit because you don't always need to keep holding just to figure out where it's going to go. That's like just stupid. You should take your 2, 3 hour and wait for another day or wait for more cycle alignment. If you want to take those kind of trades, you have to prepare for it. You just can't out of the nowhere have a bigger target. And because what that does is you're just extending a target. You're just like praying for price to hit it and just hoping that you can get more of a move, which if you're starting to get retracers on a hold through a new true microcycle open, you're gonna have to wait another hour. And a lot of people will just, me especially, I will just close because I don't want to hold for that long. I don't want to wait for it to possibly reverse. Because we're trading intraday, we want to take our profit and we want to be done. Or we want to, get an entry for a long-term position. But I want to be in and out in 3 hours in the market. That's our 4 hour model basically for the body. That's how we want to catch it. And so that's what I want to be trading. Just nothing more over that time. OT retraces and cycle alignment are going to be the most important things here because the OTE retraces and SSMTs are going to be where your stop is. Cycle alignment is going to be what time you're going to enter and what time you're going to exit, as well as what direction. Because we're in this cycle alignment, we're looking at AMD XAMD on the daily, the 90, and the micro. So we're going to find out the direction if we're right on each cycle. We're going to know where to put our stop. We're going to know where price is moving on what time frame. That's why we have gap alignment and our IFVGs and the different time frames that we're looking at. So reversal really becomes just a pattern seeking game because you can look at this, but you can find this pattern. Trust me, you can find this. Even here we have, where's our true day open? True New York here. 90-minute was created. You could take that 30-minute off of that 30-minute. We just kind of accumulated around for a little bit, created this SMT to send us lower for our initial 10 a.m. body low. In this 30-minute fair value gap quadrants, I actually graded C of it at the first presented. I noticed this was just overlapping, and so we reversed, ended up going higher from there, which created the rest of the body for the 4 hour. But this wick low right here, this wick low, this portion right here was our wick low. And that also happened in the true microcycle open. So like I say, it's true microcycle open. If it's coming to open and you're in a trade, it's reversing, I would just exit, to be honest, because either you're in accumulation or you're in manipulation. There's only two things you can be in during an open. And if you're that early to open, then it's likely just going to stop you out. If you're inside the internal range, if you're not at like the exact high of the move, it's probably going to stop you out. So know what time it is because it's not always in your favor. And a lot of times it's not in your favor. And we want to be in the market when time is in our favor. When the 30-minute tells us what the 4 hour is going to do. And when the 4 hour, if it isn't doing much or if it is just, not moving or not giving a good entry, when it's going to be good for a 90-minute reversal. Because I'll tell you right now, the 90-minute reversal is so simple. Just to go over it, 90-minute reversals, we're stalling until 10:30. You see right here, we created that IFVG with the 10-minute 10:30 open price. If I can move this out of the way. creating this IFEG with the 1030 open price was our wick. We hit true day open. We had a late sell off. This is our 1030 model. We have 1030. We have our microcycle. We have inversion for value gap, 2-minute and a 30-minute. We have a 90-minute SMT higher. We're trading down to this 4-hour for value gap. CE is at a reversal, and it creates a 5-minute BPR, and the microcycles are aligning in to reverse off of that. But this was our low. This is our short position. That is your short position, and you could have an entry right there. During the accumulation, turn manipulation, right there, it starts to just dump immediately. And then come distribution, we are coming close to hitting our target. In expansion, we hit our target and expand the opposing direction, and then we restart the cycle to go up the other way. This is just how the market's moving. This is market maker models. So this is what ICT teaches. Now you have the tools to read it with QT, with the true opens, with the cycles. Now we can read it and have a blueprint on time and price. Here's another reversal, which is just the same thing as our 1030 reversal, but it's happening at a later time. That means that 30-minute PO3 did not hit a true New York or true day open, did not hit really any target. 4-hour didn't continue to hit any target yet. And so 90-minute had to open, hit our target, or it's continuing off of 4-hour hitting our target. We're just waiting for that 90-minute candle. And we're going to reverse from there like this. We reversed all PM off of this 30-minute. So right here, you can see we open 1030. It was this candle, this black candle. Off of that body, you could have had an entry. You see a propulsion block here, this IFEG under true New York with a 90-minute microcycle. And off of this, immediate reaction. And off of that, we're trading all the way up to yesterday's PA and higher. Like you can see, this is an insane correlated time. If it's coming down to a 1030 open, if it's wanting to be really late and delayed, if we get our continuation 30-minute. So here's our 30-minute open. 10 a.m. manipulation, selling off is basically this continuation of 30-minute. It just wasn't, it was just accumulation. Here's our manipulation, it was kind of late. And then expanding in our new 90-minute. This was our true move. This distribution was really lackluster, but this expansion was the move, and we just had to wait for another 90-minute cycle, and you could have got a re-entry off of that new true microcycle open tap right here. So there's ways to re-enter. There's, just being in at the bottom too, because our reversal is really what we want to be catching. So it's pretty simple. That's really it. We're just looking for the same pattern. So like I said, reversal. The main thing that we're looking at though is where to exit, because our entry, we could all see that this entry is easy. The first IFEG, after creating an SMT in the range, or if it's time based, I wouldn't enter early, but if it's time based and you really feel that it's about to happen, wait for an SMT. But you'll notice that it'll probably happen soon after. If you're really feeling that and the cycle is about to end, you'll probably get an SMT. And if it's not, then it's not A+. So simple 4-hour model. I love it so much. I mean, we talked about how it's related to the 90-minute, and the 90-minute is just an easy continuation off of that. It's just waiting for time to catch up to, waiting for price to catch up to the time. Because on this example, this is a lot of waiting. This is a lot of accumulation waiting. I mean, until 11 o'clock, we didn't start dumping. But 10:30, I used the candle off of that reversal. You could have entered right here with a stop above this wick CE body around here, and you would have caught the rest of the move. So there's entry models. We'll talk about more entry models to get in and out of the trades, but I use about the same thing all the time. If we're already trading in this range, then I want to use the opening of 10:30 and 10 a.m. If we're looking at 10 a.m. reversal, I want to use the body of 10 a.m. That's really it. Body of 10 a.m. to find out where our CISD is. True microcycle open to find out our opposing low, which would be right here. Standard div to find out how low we could be trading. -4 right there. If you actually let's really look at this. On this negative retrace, -4 of our standard div is right at the bottom, and that's the bottom of the day. That's the bottom of the day. So the precision here is just it's honestly fascinating. when you trade long enough. It's really just fascinating how precise it is. Like this FEG tap on the 30 minute. The 30 minute was the highest time frame gap that I saw. There was no, I just chose the 30 minute because I like it more than the 15. This is the highest time frame gap that was provided, and I took the quadrants of that to grade it, and off of CE, you can see the fair value gap tap first presented perfectly. It's perfect. It's like it's picture perfect. There could not be an easier entry if you tried to bottom tick just off of OTE levels. So that is just the power of our 4-hour PO3. It holds so much power over the market, especially the AM session, and we'll talk about continuations next. So the 4-hour continuation is going to do one of two things. We're either going to do something like we see up here, which is continue from our 30 minute, and the 30 minute is always going to be where our reversal is for the day. If we're having a true daily continuation, like a day like this, our 30 minute PO3, this is going to be our wick low for the 30 minute PO3. That's going to be our low of day. There's no doubt about it. And then we get days like this. Up here, we can see that our 30 minute was our low, but not our low of day because our 4-hour continued to hit our target, true to open right here. And then we just ended up moving lower for the day. That was also, we had FOMC today. So that played into price action. But you can see here, I did not follow really time frame or gap alignment because we had CE of our range right here. We had the only near discount sell side. There was no other discount sell side. And it was so close to CE. After that, we had a microcycle that formed. We had a first presented for value gap, 5-minute structure inversed, and off that 10 a.m., we ended up sweeping this small low right here and then expanding, creating our 2-minute inversion. And then our CISD off of 10 a.m., which is this large candle right here. You could have entered at like this wick low when CE of that candle got tapped into, and then been in that for another 30 minutes for 11 a.m. and that'll be their first hour and a half of trading. That would be where you get your next true microcycle open, and that's where you would exit based on time. Looking at the opposite example, when we're truly having a daily expansion, we have our low of day completely at the bottom of the market, and our 30 minute created a large move, which was then supported above True New York, and then from there, each opening our 4-hour and our 90 minute. If you just align this is a 5-minute chart, so if we do align this to the time, then I have to exit to adjust that. If we align this by the time, then right here we have 10 a.m. 10 a.m. is right here, this candle opening. Sweeps our low to send us higher in the first presented. Then 10:30 right here. This candle sweeps us in this 5-minute, near 5-minute for value gap to, and 90-minute for value gap to send us higher. Like that small 90-minute right there, that is another reason why we use gap alignment, because that 90 and that 5-minute could be your entry, and that would be a very low stop entry. So catching continuations for a daily delivery is very, very important because that's when you can get those trades that will literally pay your year off. 100% will pay your year off if we can get in below initial low, or if we can get in like off of opening, off the first presented and have a low stop, then that really is like, traders say that you need one trade, you need one good trade to retire. And that is so true. And with QT, like this gives you the tool to get those reversals, because this trade right here, this is another example of price manipulating to a target with the 10 a.m. and then reversing for the rest of the day, because this went all the way up to fill this. This is a market maker model, and this was the low. So let's look at this on the full screen. You can see that our high of this reversal was our 10 a.m., sorry, our 30-minute PO3. After this protected high was put in place, we had 2 microcycles. We did not have a 90-minute, but we had 2 micros, so that's why I said 2 is important. Having 1, it's all right, but having 2 right here definitely gave me like the confirmation that we're moving lower. I didn't need a second 90-minute. You can also see the 90-minute microcycles XAMD. So we're looking at manipulation during this time. When 10 a.m. opens, I'm using the 2-minute, the first presented, and the 3-minute gaps, and I'm also using what cycle we're in to determine the quality of the price action. See, this accumulation, I can see that by the cumulative structure. Before we tap R or our fair value gaps slash just our dealing range CEs and discounts to send us lower. Like we have to have retraces to move lower, but how big the retraces are, how fast they happen is definitely the one thing that tells me for certain if price is going to be good or bad. For value gaps and how they're traded into and order blocks after those fair value gaps are created. That's like how structure should move when it is A plus. So I knew this wasn't A plus. It was just lackluster, but it was still moving to the target and it was still respected gap alignment, gap structure. So that's why this was a good trade to take actually. So after this, you can see our reversal happens in our new cycle. This is an A starting in our 90-minute accumulation. You can see it's pretty accumulative, but off this microcycle we created with ES at discount. During that turning point, you can see that we reversed off of that alone and creating our market maker reversal off this 5-minute, because this was a 5-minute BPR right here. It didn't even need to hit that low because it wanted to come up, because our discount range of that distribution created that microcycle that gave me the confidence to take a trade like right here. I think it was at this BPR getting inverse that I entered with a stop right here, and that low entry stop I took on paper because I traded the short, and it just shows you like the quality the quality of the trades you can get is unmatched if you align price and time correctly and you're in the right cycles. No matter if you get like a short-term move like this, you're still getting great RR. And it's only better if it's a daily continuation day. Something that I also look for is like a deep retrace. We talked about the 15-minute right here, how it was like a really deep retrace, and ES actually took this target. And so the trade got break even, but not break even, but like I closed early, so it wasn't a profitable trade, but like you can see the RR on this after trading into 15-minute gaps. I'm talking about like a 15-minute. We're looking at the third or fourth one. Usually the first candle to tap isn't the one to make the movement, but looking on the 5-minute, narrowing it down, if we just like jump straight down to the 2-minute, this would be your entry confirmation. Something like that, SMT at the lows, and then easily that's a great low-hanging fruit target, or you can hold it for longer until the cycle is over or until next cycle, which is then when the movement starts happening and in the PM session. So like a trade off of this 15-minute is what, and not even just trading it, but looking at the structure, looking at where the bodies start to open and close and where you want to enter inside the wick, because that's where the precision comes in. That's where we can get those lower stop entries that are like close to 20, 30 points in this market, which is very low in this market. Used to be you could take 12, even 8 to 10 point stops in 2024. Now you cannot. Even in 2025, it's PI started to pick up. So 15-minute structure like this, 15-minute structure like this is my favorite to trade off of. You have that in like reversal of the range, and if we're continuing like it's a big distribution day and we're wanting to distribute lower, something like this, a continuation I would have held for longer, because usually this is going to get doubled in the next range it creates if we're really dumping. So 15-minute PO3 continuations, like I said, use the, if it's not the first one to tap, the second one to open will. If it's not the second one, the third one, then you're getting into like 10:30 opening, which is the delayed range. So 15-minute to the 10:30, like these time frames are correlated. So 10:30 is another 15-minute open. If you look at this 15-minute open, completely rebalance the bodies. So I would suggest you use the 90, the 15, and are just opening 4 hour and 30-minute. Those with those four higher time for intraday time frame candles, those chart times, you will start to see the bodies perform as CISDs. And that's really what I want to teach. That the wicks, you want to enter on the body because that body starts to create a reversal in each candle. And that's not like reversal at any time. That's the reversal in each candle, whether it's a 5-minute candle on the second time frame, whether it's a 4 hour candle on the 2-minute time frame. And we want to get in that wick because that's where we have the most opportunity to catch these big moves. We're either looking for a 15-minute type of continuation, Like here, that's my first criteria, 15-minute continuation. The confluences are the same, the exact same as the 30-minute. I mean, this is just how to get in on the PO3 candle. That's really what these confluences are used for and the time. So the confluence is the same. We want to get in on that 30-minute candle in the optimal trade entry with the SMT, with first presented possibly being our IFEG, and target the range that we just made and lower. So that is the target for short-term reversal. You don't want to target lower because that was anticipating that the day would move in one direction. This, with a reversal like this, you just want to target low-hanging fruit like true New York, take a partial there. If it's not like completing the movement, then have partial set lower or just put your full TP there. If you got in a bit later, you waited for a little later after 10 a.m. If you didn't get in at the top in the quadrants right here, because this is a new daily opening gap. I was like in at the top of that. But if our 10 a.m. is continuing our structure lower, then the new daily opening gap SMT is so perfect. Like let's just go to regular trading hours so I can show some of these opens on how they continue. Off of this, if you're not using a small new daily opening gap to enter in off of, like, what are you doing? Here's our open. CE of that is bounce price range. Get in right there if you missed this entry. And I missed that entry, and I missed both entries actually. Here's another day. If we're not just expanding off of this, if like some of these are SMTs, then that's how I would use the SMT at open. Small openings like that, take this trade at the bottom here to these highs right there, and then from there reverses from these highs. We just discussed that PA with the charting. That's our late reversal. Here's another example, like opening was here, close was here. OTE, SMT, possibly at the bottom one of these, catch the reversal, and you would have had to wait out because it only hit premium before it started. But like, this is what I'm saying. Use the new daily opening gap range. New daily opening gap range here, there was none. So like an example would be I would try to find how this new daily opening gap would look. There's a close here, there's an open there. So off of that, that would be like a late 10 a.m. trade. 10:30 would be right there. Like this right here. If you didn't get in here or at this bottom and you got stopped out somewhere here, then this would be a re-entry. Like this block is the re-entry. I use these gaps so often. I cannot tell you how many times I use these gaps. So use them. They are for your favor. Right here, open to that. This one's so small. This one is literally like right, that's even too small. Like right there. And look at that. Look at how it used that before taking out some sort of discount sell side. Like, oh my goodness. Use the new daily opening gaps. You should have a clear understanding of time, price, and liquidity. And we talked about the confluences and the concepts above on how to enter based on time, price, and liquidity. True opens, cycle, gap, PO3 alignment for all three of them together, and then just reading candle order flow in our PO3 price and our AMDX cycles, reading the SMTs with the new daily opening gap as well, and between the different PO3s. And that's our retracement on daily continuations that we talked about. And so coming down to what we're actually trading, because the reason we only need the two Kraken correlations is because we're trading 6 hours of price action, 6 a.m. to 12 p.m. That is one 90-minute cycle. That means we have 4 microcycles, we have one 90-minute cycle. So really 2 Kraken correlations is all that we should expect for that time to hit our target price, because it has to hit something. It has to hit some sort of liquidity. So in that time, we're trying to find that liquidity for that PO3. So this 30-minute leading into the 4, leading into the 90-minute, that whole model is based on us having 2 Kraken correlations for this time frame. If we have more, like I said, we get a bigger price move, and that's why we expand and trading into the weekly and then Then over that, the monthly or the quarterly and the monthly and the yearly cycle. And aligning all those, I think this year you predicted the bottom with a 3 month SMTF with YM. The bottom of the year was predicted. So off of these, it can only get bigger. It really can only get bigger. Just the moves you get off of correlating higher time frames, just more than 2 minute. If we just use the 3 minute, if we get a daily and we get a daily SSMT, then that is literally like an all day move, an all day type of move. And if we get more than that, then usually that's like the move expanding the week. If we get a weekly cycle, or it's a really aggressive day. So expanding beyond 2 cycles is when you get the higher RR trades, but you only need two to enter in. But that's when you expect to enter and sorry, you expect to exit off of time because we're trading in a smaller time frame. So using logic, you can figure out your own exits, and using the true opens, it shows you where to exit. You just have to be right with the one, and you read price to figure that out.